Let's talk about a lifestyle price anchor and immediate market context that defines the current arena. NVIDIA and NASDAQ NVDA continues to command the absolute center of gravity in global financial markets, trading against a monumental backdrop where quarterly data center revenues alone have eclipsed what entire legacy semiconductor conglomerates generate in a full fiscal year. Wall Street financial media screens are perpetually flooded with superficial debates, analysts arguing over whether hyperscale capital expenditure cycles can sustain their velocity, talking heads questioning if tech giants will experience spending fatigue, and retail forums buzzing with anxiety over short-term valuation multiples. Yet, while the mainstream financial press fixates on headline-grabbing market capitalizations and superficial quarterly growth comparisons, they are entirely missing the hidden structural reality and physical bottlenecks governing the next generation of computing architecture. The real story isn't just about floating point operations per second or raw transistor counts. It is about the agonizingly complex physics of power delivery, thermal dissipation thresholds, and optical interconnect limits inside modern data center clusters. When retail investors look at NVIDIA through the lens of a traditional hardware vendor, comparing it to the cyclical, commodity-driven memory and processor cycles of the past, they fail to grasp that the company has fundamentally mutated into the central architect of the global digital infrastructure grid. Standard financial commentary treats AI accelerators like high-end graphics cards that can be swapped out or commoditized at a whim. The reality on the factory floor and inside advanced packaging clean rooms at Taiwan Semiconductor Manufacturing Company, TSMC, is radically different. We are currently facing a profound physics bottleneck. As large language models and autonomous agentic workflows scale toward trillions of parameters, individual chips can no longer function as isolated compute units. They must operate as a singular, unified, coherent supercomputing fabric, where the speed of data transfer between chips via ultra-dense interconnects like NVLink matters more than raw clock speed. Retail traders scrolling through trading apps often get shaken out by routine macroeconomic jitters, interest rate anxiety, and short-term headline volatility, viewing pullbacks as signs of a collapsing growth narrative. Meanwhile, institutional heavyweights view these exact same technical retracements through a completely different analytical framework. They recognize that NVIDIA's true moat is not merely its silicon design wizardry, but its insurmountable software ecosystem lock-in via CUDA, alongside an unmatched co-design methodology that integrates advanced packaging, high-bandwidth memory, and optical networking into an indivisible stack. While the public perceives a volatile stock driven by speculative frenzy, institutional block orders are quietly accumulating shares during periods of compression because they understand a fundamental truth. The world is transitioning from traditional CPU-based general-purpose computing to accelerated computing, and NVIDIA sits at the absolute choke point of that multi-trillion-dollar industrial transformation.